In the last lecture, we see the model of the multiple time frame analysis. You saw that how the higher time frame and lower time frame works together. In this video, we see the application of the multiple time frame analysis. Before we start the video, you can see here we start the mentorship program. In this program, we share the live market information as well as we just clear your funded account from $5,000 to $300K. We also start our signal program for Forex and as well as for Indian stock market and commodity market. So let's start the application of the multiple time frame analysis. So here you can see that this is the graph of Euro USD. We identify the supply demand with the market structure and how it connect with each other in the higher time frame as well as in lower time frame. So let's start with the 4-hour time frame. You can see here, this is my 4-hour time frame analysis folder. And now I will just explain you the detailed information of this 4-hour chart and how you have to draw the chart and how you have to mapping the chart. You can see here, this is the pivot created demand, right? Here you can see that this is the model of the continuation pivot created demand model. In this I button, you can check the video of range created demand and the pivot created demand models. Now, from this pivot created continuation demand model, you see that price taps into this demand zone and now it again moving in the upward direction. You can see the buyer's injection at this point. Again, price taps into this demand zone. You can see that again there is an impulse wave and also the price return back to this demand zone in a correction form. After taps into this zone, you can see that price break this higher high and again it forming a new higher high, right? So this dark dot represents the higher high. After break this higher high, the new higher low is exactly at this point. So you can see that this is my new higher low at this point. After price making the higher low, our next target should be in the upward direction or in the continuation direction. You can see that price is respect to the demand zone. Each time price break the structure and forming the demand level. Now the true demand zone is find out with the help of this candle and its formation. You see that there is a true impulse move comes from this point. So this is the pivot created demand. There is a sharp move in the downward direction, true expansion in the upward direction. After price break the higher high of previous structure and now it come back in a correction and you can see that again it taps into the demand zone and you see the an impulse move and it break the previous structure. So our next low is this one. After breaking this higher high, price makes another higher high and this is our last higher low. So now market respect the higher low and it again moving in the upward direction. Here you can see that price again break the structure at this point. This is not the true break of structure, but for the other reasons, we consider it break of the structure. There are also some topics which are not covered at this time. We will cover that topic in the future. So for now, this is also the break of structure. Price break this higher high at this point, and now this is the confirm higher low. This is my higher low and price respect this higher low at this point. So if I map out the demand zone, this is my demand zone and price returning back in a correction form and taps into this demand zone and again going in the upward direction. It continuously break the structure and price respect the demand level. You can see that price respect the demand level, right? And it creates a new higher high at this point. After creating this higher high, we will confirm this is our higher low. So if I mapping out this demand zone from this low, we can see that price is respect to this demand zone at this point. You can see that price is again tapping out exactly at this point and again you see the buyer's injection at this point. So market is continuously moving in the upward direction. So it is the combination of supply demand with the market structure. Now again you see that after price breaking this previous higher high, this is the time frame of 4 hours, and price is again moving in the upward direction, and it makes a new higher high at this point. Here you can see that there is a no true structure at this point. This is a range created demand. Price just taps into this range created demand and again moving in the upward direction. Again you see that there is so much liquidity raised on this structure. Here you can see that there is a trend line liquidity at this point. So our true structure is this higher high and this higher low. This higher low is not broken, so my target is again this higher high. If the price taps into this higher low, then again I just want to take a trade in the upward direction. So you can see that price just taps into this demand zone. This is the first time when the price comes into the demand zone. Again it going in the upward direction and it creates a equal high. Again price second times moving in the downward direction. Again it creates a demand. Again you can see that there is a heavy impulse and price just taps into this demand zone, and again it going in the upward direction. It again creates a equal high, and ultimate the market is break the previous higher high. So you can see that market is continuously breaking the higher high and higher low, and it creates bullish market structure. So this is the scenario in the 4 hour. Now we understand the market structure in 30-minute time frame in Euro USD. So you can see that I just hide this 4 hour time frame, and this is my 30-minute time frame. Now you can see that this is my 30-minute time frame in Euro USD, and I will explain you how the 30-minute time frame is correlated with the higher time frame. So in the 4 hour time frame, we start our analysis at this point. But before we start in 30-minute time frame, you have to understand the previous market structure. So here you can see that market is coming from the upward direction, right? It continuously making lower high and lower low. This is our range created supply. You can see that price is continuously moving in the downward direction. Price creates equal high, and again you can see that this is our first impulse move, and after price creates a range created supply, this is our second impulse move. So if I modify this supply, range created supply, then that was the exact situation where the price stuck between these 2 points. You can see that price is stuck between this range, and from the center line or equilibrium price, you can see that price is again going in the downward direction, right? And it again breaks the previous lower low. There is a lower low at this point. This is our lower low, and price just break this lower low. It moves in the downward direction. This is your change of character, and this is your break of structure. This topic is coming in our next videos. So this lower low is broken exactly at this point, and the lower high is broken at this point. So this is called the change of character. And you can say that the price is now going in the reversal direction from this point. After breaking the lower high and lower low, now we can confirm the price is moving in the upward direction, right? So this is the last area where the sellers are enter into the market, or you can say that there is a heavy volume comes into the market. There is a seller's volume, again there is a seller's volume, right? So these are the area where the sellers are interested to take a trade in the downward direction. So here you can see that this is my 30-minute time frame. If you don't see the video of market structure, then click on this I button. Here you get the video of the market structure. Also, you can see the application of the market structure and how it relates with the supply and demand. So after breaking the previous lower high, you can see that there is an impulse move generated exactly at this point. If you don't see the modification of the supply and demand, you can see this type of continuation model exactly at this point. So you have to mapping out the chart exactly at this point. This is called the imbalance zone. Price is coming back at this imbalance zone, and it just taps into this continuation model. And how you have to draw the continuation model? You have to understand the continuation model where the injection is forming from buyer's side. Identify the higher high of the candle and the lower low of the next candle, and just mapping out this demand zone. When the price again came back at this point in a corrective wave, you can also take a trade from this point. So now from 30-minute time frame, this is my higher high and this is my higher low. After price break this structure, now this is my confirm higher low and price again going in the upward direction. After breaking this higher high, you can see that the candles are forming weak. You can see that there is a weak candle formation or very tiny candle formation. Then again, there is a so much equal high or equal low. So this is our liquidity area. You have to be careful. Price, it break this liquidity zone. Price is break this zone and again going in the upward direction from this point. Still our low is exactly at this point and price creates the higher high exactly at this point. So now you can see that price is coming back to this demand zone in a correction wave. Before it came back to this zone, this is called the inducement, which will also covered in the upcoming videos. Price is coming back in a correction wave. You can see that price is coming in a correction. Price creates the liquidity. Price swept all the liquidity. And again, this is the supply area and price came back to the supply area, again going into the demand area and suddenly it moves in the upward direction. This is our true higher low where the demand comes into the market. So again, we see that price is suddenly moves in the upward direction. Our next target is this previous higher high. So price is going in the upward direction. You can see that this is our substructure break, right? This is our substructure break. This is our change of character in our lower time frame, right? And after change of character, price is again moving in the upward direction and it also respect the previous demand level. Again, it break the structure. Again, it break the structure. It respect the demand level and price is continuously moving in the upward direction. You can see that the buyer's injection at this point, again at this point, and ultimately after making correction, price again moving in the upward direction and it breaks the previous higher high. Now it breaks this higher high. So our next higher low is this point. So you have to understand where is the sharp move and true expansion. So you can see that there is a seller's volume, there is a sharp move in the downward direction, true expansion in the upward direction. So this is our pivot created demand. So if I'm mapping out this pivot created demand, you can see that price steps into this demand zone and again it moving in the upward direction. You can see that there is a buyer's injection and how price react at the demand zone at this point. So this is our demand zone and ultimately the next point of interest is this one. So you can see that price just break the previous higher high at this point. This is the line where the sellers take control in the market. So you have to understand this is the point where the sellers comes into the market. This is the point where the sellers comes into the market. Our reversal it starts from this point. Price creates a higher low and higher high. Again you said the higher low, higher high, higher low and higher high and price just takes the external liquidity and it's going down and suddenly what is happened exactly at this point, because this is the seller's area, flip is the supply is becomes now demand and when the demand is becomes the supply, that is called the flip. So this is our supply area. Now this supply area is broken at this point. So this is called our demand area. After broken of this supply area, you have to see that how it breaks in a lower time frame. You can see that how the supply area is broken. So initially, you can see that price respect this supply area. You can see that price steps into the supply area and move in the downward direction. Where the exact supply area is broken, this is the exact supply area is broken at this point. So this is our flip and price respect the supply area and it coming back to the center line and price again going in the upward direction. So this is our true supply area that is broken and now this supply area is works in a higher time frame as a demand, right? So the pivot created continuation model you see in our 4-hour time frame, that is the flip area in our 13-minute time frame. After breaking this demand area, you can see that price again going in the upward direction with an impulse move. This is my true higher low. Why? Because now this supply becomes the demand and price is again going in the upward direction. In 30-minute analysis, you can see that there is a sharp move in the downward direction, true expansion in the upward direction. You can see that price creates a higher high. Now the price is going back in a correction form, and this is now my true demand area. Price just taps into the demand area, and now price creates a demand zone from each and every point. You can see that price creates a demand zone. So the true breakup structure, you can see that price creates such breakup structure. This is my demand area, right? Price again create a breakup structure. This is my true demand area. Price again create a breakup structure. So after breaking this structure, price creates a pin bar, or you can say that price is forming a sharp move in the downward direction through expansion. So this is our small pivot point, or you can say that this is our range created demand, and from center line price again going in the upward direction. So this is our true point of interest where the market is going in the upward direction, and our target point is previous higher high. So you can see that this is our true higher low, and our target is this higher high. Prices break the previous higher high at this point. So this is our next true demand zone where the price steps into the market, and again it going in the upward direction and it break the previous higher high. And now you can see that, but you have to understand how the price react and what is happened at this point. Price creates a liquidity. It just swapped the liquidity and price is going in the downward direction. It taps into the demand zone, and from this point price is moving in the upward direction. And now this is the true point where the price going in the upward direction. So now you can see that this is my demand for 30 minutes, and now price just taps into the demand zone and it again moving in the upward direction. This is not the true structure break. You can see that price break the structure, but this is not a true break. Price break the structure, but it not come in the downward direction. So this is my final break. So after break the previous higher high, you can draw the demand area. And for this model, you can see that how you have to draw the demand area. We can see this model in one of our particular video, modification of the supply demand. If the wick is relatively large, you have to just mapping out only wick. You can see that price is again going in the downward direction. This is confirm higher high. This is liquidity. Price creates the relative low at each time. Now price going in the downward direction, and after taps into this demand zone, price is again going in the upward direction. But where is the true zone? So you can see that price is going in the downward direction. You can see that again it break the structure. Now this is my confirm lower high in a substructure. Now price break the substructure. Now from this minor structure, price is going in the upward direction. So now what is the substructure and minor structure, which is also comes into our next video. Now this is our true demand zone, or you can say that there is a sharp move in the downward direction, true expansion in the upward direction. After this expansion, it break the substructure's previous higher high, and again price going in the upward direction, or price just respect this demand level. You can see that price respect the demand level. Price creates a potential liquidity at this point. Now the price break this previous higher high and it again going in the upward direction. So in the nearly future, price is again going in the downward direction or taps into the demand zone. You can see that there is so much liquidity raised at this point. Price also creates a liquidity at this point. So there is a liquidity at this point. There is a liquidity at this point. There is a trend line liquidity. There is again trend line liquidity. There is again equal low liquidity. Price swaps this whole liquidity, right? Price swapped this whole liquidity, and again it moves in the upward direction from this point. So this is our true demand zone, and price is again going in the upward direction, and you can see that the injection of the buyers is too heavy. So again it break the previous structure at this point. This is our 30-minute time frame analysis, or you can say that the lower time frame analysis. After break this previous high, now this is my confirm higher low, right? So now how can I draw the next demand zone after break the higher high? You have to understand price is going in the downward direction. Price is break the structure, it respect. Price is break the structure, it respect. This is our change of character in a lower time frame. And now this is our minor structure. And now you can say that this is our first pivot created demand. And you can see that after taps into this pivot created demand, price is again going in the upward direction, right? This is also the liquidity. There is a trend line liquidity. This is not the true structure. We have to identify the injection of buyers. So this is our first injection. This is our second injection, right? Before the injection, before the second injection, there is a so much liquidity raised below this area, right? So this is not the true structure. The true structure is this one. This is the one impulse move, and this is our next higher high. So you have to identify price return back to this zone at first point in a correction mode, right? This is our second point of interest. Price creates equal high. Again, price creates relative highs and price going in the downward direction. It swaps the liquidity and again it going in the upward direction, right? So you can see that this equal high is swept at this point. This is the true sellers area where the market is running going downward direction and it break the previous two lower low. So now we saw the situation exactly at the starting of this 13-minute time frame analysis. This is the sellers area. Now you have to see that price break the sellers area at this point. After breaking this zone, price is going in the upward direction. So now this supply area is works as a demand. So this is my true higher low. And now this is the respected higher low. You can see that this is my true demand area. Price creates a liquidity at this place and price just swap the liquidity and also it break the structure at this point. And now again from this demand area, this is my true demand area and price is moving in the upward direction. So our next target is the previous higher high is our next target. Price just break this higher high, right? And this is our true demand area. So when the price came back exactly at this point, you can see that this is our running chart. Price creates a liquidity, it just swapped the liquidity and it break the previous substructure higher high. And now the price is moving in the upward direction and you can see that there is a heavy candle running at this time and this is the candle of 30-minute and in this 30-minute you can see that there is a so much volume comes into the market around 42 pips. So why this market is going in the upward direction? Because we just taps into this 30-minute demand area and this is a good trade. And our next target is must be the previous higher high. So this is the graph of Euro USD and price is continuously moving in the upward direction. So you have to understand how the market works. If you want to take a trade into the market, you have to understand the market structure. This is the 30-minute market structure. We just see that. And now we just combine the 30-minute market structure with the 4-hour market structure. So this is the graph of 4-hour market structure. You can see that this is our 4-hour chart. And you have to just see that how the 4-hour and 30 minutes will relative to each other. And you can modify the demand area or supply area with 30-minute as well as 4-hour. So you can get a better entry in lower time frame and you can take a higher risk reward trade and earn a good amount of profit. So this is the structure. If you want to learn more about the live market, you can join our mentorship program. So here you can see that we are also available in our social media platforms. This is our Instagram account and this is our Telegram account. If you want to join our mentorship program, then you can send us a message on our social media platforms. We also start our signal program for Forex market as well as for binary market as well as for Indian stock market. So if you want the mentorship program, DM to message us. So if you like the video, please share it and subscribe the channel and don't forget to click the bell icon.